Hey, everybody, Roman here. Happy Friday. It is October 15th. And as the description in this post says, as you well know, I'm generally pretty anti loans, at least when it comes to paying for college, because, well, I just don't think there's much value in paying for college with loans because that's just digging a deeper hole. If you don't have the money to pay for it, chances are we should look for free money, money that you don't have to borrow and later pay back. And I believe that's a much, much better way to pay for college so that, our kids can graduate and start their lives and start their careers without having to dig themselves out of a hole. But also that you as a parent doesn't have to set yourself back and instead, have a more comfortable and secure life and secure retirement. So, anyways, I think enough about that. You know that I'm not into student loans. That's just, let's put it out there. But a parent was just 10, 15 minutes ago, we were talking, and she says, gosh, we still have a gap, and we might not get the financial aid that we need to pay for college. And so we're probably going to have to borrow something. So what should we look for? Where should we borrow from? And I find that these are questions that are finding their way to most people's top of mind because that gap between the amount of money that you have saved and the cost of schools is not always, manageable with the money that you have, the savings or financial aid. It might be hard to get. So if you have to borrow, where do you borrow from? Which loans are okay? Which loans are not? So let's talk about that for a minute. The first thing I'll say is this. If you're going to have to borrow, the first place I would recommend you go to would be the government and have your student borrow what's called a direct subsidized student loan. Actually, if there's a loan that has the word direct in it, that automatically means it's coming from the government. And that's a good thing. The subsidized part means that your student doesn't have to pay the interest, nor do you, by the way, on the money that they get while they're in college. So it's basically like an interest-free loan for the 4 or the 5 years that they're going to be in college. And that's awesome because when they ultimately graduate, they'll have to repay the same amount that they borrowed, not more. And the government basically pays the interest on those loans while your student is in college. So that's the good thing. The bad thing is that you're pretty limited by how much you can borrow or how much your students can borrow. And that limit is $3,500 for their first freshman year. Then it goes up, I believe, to $4,500, or no, or maybe it's, yeah, and then $5,500 in the third year, and then that's it. So you can't really borrow much more than that in the subsidized student loan. So if that's enough, that's all you need to bridge the gap, that's where I would recommend you borrow from first. If you still need to borrow more, then there's something called this unsubsidized direct student loan. And that's more or less the same, except that you either have to pay for interest right away or just let it accumulate and pay it off when they graduate college. But that interest starts to grow from day one when the money is given out. But the benefit of both of those loans is that because they're coming from the government, the interest rate is controlled. So it's not like a private bank that can change their rate and usually increase them significantly. So the government keeps it relatively manageable for most people. Number two, you have a lot of protections from the government loans because if your student graduates and can't find a job, or if they do have a job, but it's not the ideal job that they were hoping for and doesn't pay them as much as they expected or hoped for, well, there are different repayment options. You can defer paying that loan. You can repay it as a percentage of their income. So it can be more manageable than a private loan that will usually have much, much higher payments. And then the third reason is that it has those protections going forward. So until they pay off that loan, if their circumstances change, of course, we hope that our kids' circumstances only improve for the better. But if some things happen that their financial situation is in a tough spot, well, they'll always be able to work with the government and lower their payments or extend the amount of time that they're going to pay those loans off. And this was actually a really, really interesting question that I think in the last like 20 years, no one has ever asked me except this one parent, which again inspired this conversation. And so the question was, um, so can you amortize these loans? And I said, well, what do you mean by that? And she says, well, like you take a mortgage and you can choose to amortize that mortgage over like 5 years, 10 years, 15, 30. I said, okay, I see what you're saying. She's like, well, what about student loans? Can you amortize those? And it's an interesting question because not many people, like I said, no one that I can remember have asked me that. And the answer is yes, you can sort of choose the amortization schedule, but it's what the government calls the repayment schedule. And it's not something that you have to decide today when you take out the loan. So you don't have to make a decision right now that is, potentially the wrong one. So there's no fear of that. The only decision you have to make is, do you borrow the money? And if you do, which of the loans? And then when your student graduates college, that's when they're going to decide which repayment schedule they're going to follow. And how many years they're going to repay it. That's going to be up to them when they graduate. So that's a really good thing. But which loans not to take? I feel very, very strongly when parents take out these Parent Plus loans for their kids. Now, I recognize, I appreciate, and I respect every single parent's desire to help their kids. And in this day and age, we know that our kids need some type of college education to have better chances of a better career and a better life. I get that. But you shouldn't you shouldn't drive yourself into the poorhouse if you can't send them to college, because there is no data to support that if they go to an expensive school that you can't afford, that they're going to do better in life than if they go to a less expensive school that you can afford, or if they go to an expensive school that has really good financial aid. The thing that matters is that they go to college. The thing that matters is they get a degree. It really doesn't matter that much where the degree comes from. So oftentimes parents are going to put themselves into this really kind of tough spot where they psych themselves out and they convince themselves that their kids have to go to these, elite schools that are very, very expensive. And because there's so much demand for those schools, they generally don't give a lot of financial aid, or at least not in merit scholarships or tuition discounts. They'll give you need-based financial aid if you have a qualifying financial need. But if you're a slightly higher income family, you don't qualify for a lot of need aid, then those colleges won't give you much. So you'll have to shoulder that, bigger burden of paying the higher tuition. And that's when I tell people, just find a less competitive college. It doesn't matter if it still has a high sticker price, because those private colleges oftentimes have extra money set aside in their own endowment funds. It's like their reserves that they can use to give to kids that they really want to attract. And it will significantly lower your out-of-pocket cost, even if you don't qualify for a lot of need-based financial aid. But that's a phenomenal way to bring the cost of colleges down and making it affordable for you, whatever your circumstances are. But so many parents will convince themselves that that's not good enough for their kids, that they really have to go to these really, really expensive schools that don't give any aid, and that it's worth putting themselves into debt just to get their kids through those colleges. And unfortunately, it's usually not worth it. And in the end, while your kids have these student loans that have these protections that can be delayed, can be deferred, they can be forgiven if they go into certain careers, if you take a loan as a parent, none of those protections exist. You can't change the number of years. You can't reduce the amount that you pay them back. You have to pay it back 100%. And unlike a lot of other loans, they're not even dischargeable. If you, God forbid, have to file for bankruptcy, you can't discharge them. You can't even negotiate them down because they're coming straight from the government. And while those are good for students, they're not good for parents. And if you don't pay those loans back, they're either going to send you a big tax bill or they can withhold your benefits. So if you're hoping to retire one day and get Social Security, if you don't pay those loans, the government can just hold back your Social Security payments so you don't get them. So I think I've made that point pretty clear. Please try to avoid any Parent Plus loans. And along with the loans to avoid, please avoid private loans, at least while your kids are in college. Private loans to the kids or to you as the parent don't have any of the protections I just mentioned earlier. Unfortunately, once you sign on the dotted line, you owe them that money, and interest rates can change. It's just not a good way to pay for college. There are, like I said, over 4,000 colleges in this country. Surely, if you take the time, you can find a few that will be a great fit for your student and that will be a great fit for you financially. It's like playing the piano with both hands. You really want to get those covered. And at the end of the day, you can find wonderful colleges that'll give your kids a great experience, a great learning opportunities, great connections, great friendships, and they'll graduate and start their life without having to be concerned and stressed and worried about paying off these loans. And please don't take these loans in your names if you can avoid it. So I think that's the lesson of the day. If you have to borrow under the student's name. Take the subsidized loans first. They're low interest. They have a lot of protections. And quite frankly, you don't have to pay the interest until the kids graduate. Secondly, take the unsubsidized student loans, and at all costs, avoid parent loans from the government or from the private banks or institutions. But when your kids graduate, if you have to refinance, that's when you do it, not while they're in college. All right. Hopefully this has been helpful. I have another conversation coming up with someone in about a minute, so I'm going to run. But if you have any questions, feel free to drop them in the comments below. Hit like if this is helpful. Share it with friends that might have college-bound kids that may have the same questions. And I'll talk to you all soon. Have a great weekend ahead and be well. Take care. Thanks for watching.